So for those of you joining us, my name is Benito Elisa, CEO of the Mauritius Africa FinTech Hub. I'm very happy to welcome you all to this new webinar where we will be having an introductory look into the world of Web 3.0. Now, this is a theme that has been on the rise for the last few years. People have been associating Web 3.0 with a number of concepts and applications, from NFTs, metaverse, DeFi, crypto. There are so many terms that we associate to what we call the Web 3. And so we would like today to have a better understanding of what this whole new ecosystem is looking like. And we could not be more excited to have some champions from around the globe with us today to join us in this learning initiative. Let me introduce Meng, co-CEO and founder of Solv Protocol. Hi, Jan. Benito Elisa, CEO of Wakanda 4.0 from Mauritius. Jevon Coffin Grey, CTO at Arrel Technology, based in Mauritius as well, but also very active in South Africa. So speakers, I would like to, first of all, thank you for accepting our invite to be part of this session. Before heading into the content today, I can see we have around 20 attendees in the chat here in the room. We're just going to give it a few more minutes for people to join us before starting. Now, let me remind you that for people who have questions when the contents are being presented later today, feel free to use the Q&A section that you will see at the bottom of your screen on Zoom here. You can ask your questions anonymously, or if you want to ask your questions directly orally to the speakers later on, feel free to raise your hand and we will unmute you when the time of the Q&A comes. So the flow of today's session will be 15 minutes per presentation, 5 minutes of Q&A per speaker, and we'll have a last Q&A at the end of the session itself. Now, the first theme of the day will be on the building blocks of the decentralized technology. I will be introducing now our first speaker of the day, Meng, co-CEO and founder of Solv Protocol, who will provide us with insights into the foundational technologies and principles that form the backbone of Web 3.0. Jan here is a blockchain expert, evangelist, and consultant in the Chinese-speaking blockchain community. He is best known for his original work in tokenomics and digital asset study. He has provided multiple training and consulting services to many well-known industry leaders and received multiple corporate and industry-wide awards. Thank you, Jan, for accepting our invitation and for being part of this webinar. I will open the floor up to you for your presentation now. We can get started. You have 15 minutes. Thank you.
Thank you very much, Benazir. It's my great pleasure to be here. Let me share my screen. So can you hear me?
Yes, I can hear you.
Can you see the screen? Okay, that's great. Okay. It's a privilege to give a talk about the building blocks of the Web3 economy. As Benazir introduced, I started my career, my blockchain career, 7 years ago as an educator in blockchain space. I remember that I declare at that time that I almost know every corner of this subject. It was a bluffing, but it's not far from the truth. Back 7 years ago, it's a relatively small subject, and you can, if you take a few years like me to learn from cryptography to smart contract, you probably know most of the knowledge and information to do something there. But today it has grown to be a huge subject, and nobody can declare that they know everything about the Web3. But today I would like to introduce you a few, I think, fundamental building blocks in Web3. So the methodology I would take is to introduce them through a few examples. Let me introduce you the first group of building blocks of Web3. These four concepts, blockchain, DLT, DID, and tokenization, I believe are most fundamental concepts in Web3. I won't, read this definitions word by word, but basically, please remember that blockchain is just a distributed, immutable database that can deliver data integrity, and can be the transactional records can be independently verified. And DLT is in most cases just another name of blockchain. You can use the term interchangeably with blockchain in most of the cases, even though they are not exactly the same thing. And DID is a special type of digital identifier that you can understand it through the example I will illustrate soon. And tokenization, I'm in Zurich, Switzerland, to join an industrial conference, and tokenization is probably the #1 most hottest topic. So it's basically the process to represent the ownership or other rights of asset on blockchain. So the major purpose or the points of doing that is to enjoy the programmability, and so to have the automation of transaction. So let's see what we can do with this 4 building blocks. Okay, let's start it from a very simple and everyday example. I believe every of you has at least one social network account. But you might know that in Web2 model, it's actually the account is actually controlled and owned ultimately by the platform, not you. And you actually asked the platform to offer some rights for you to operate upon the accounts. Okay, and if you establish a digital connection with a friend of you on the social platform, the connection is another asset controlled and owned by the Web2 social network. So that's why they can easily cut you from your friends. They can simply cut the connection. They can even suspend your accounts. They can even delete your accounts because the accounts, both accounts and the connection, are not owned by you, but by the platform. But how can we transform this? How can we change this in Web3? With this building blocks, you can first create an account. It's actually not account. It's actually an DID. You create a DID, which is fully controlled and owned by you, and you own it. And you have this DID, and you establish connection with another DID of your friends, and this connection can be tokenized and put on the blockchain. So you actually decentralized your DID, your accounts, and your social network, your social relations. With this, any third party except you and your friends can cut the relationship, can delete the DID. So this is a totally different model to run social network. And with that, with the tokenized social relations, the service provider, they could not control you and your friends and your relationship. They can only build services like gaming, blogging, and video streaming around upon this relationship. They can only serve you. They could not control you. So that's totally different model. So this is the first example I would like to show you. Hope you can see the point here. And the next group of building blocks I would like to introduce is smart contract. Is actually just another name of the program running on blockchain. It's not the business as usual computer programs. It's self-forcing, deterministic, immutable, and transparent. but at the end of the day, it's just another type of program, and it plays a central role in the advanced advanced Web3 applications like DeFi or other types of applications. And with that, we can control the asset. We can control we can program the asset. And one of the most important type of asset is money. And with the money, we have digital currency like Bitcoin and Ethereum, but in the real world, the Web3 industry is more and more towards the use of CBDC and stablecoin, especially stablecoin. The CBDC and stablecoin is just another form of digital money. The most popular examples of CBDC are ECNY, the CBDC of China, eNaira, the CBDC of Nigeria, and ECETI, the CBDC of Ghana. And the stable coin, I believe you are more familiar with some stable coin like USDC and USDT. Okay, so it's not you should be very familiar with this. We have smart contract, we have payment means, that's the stable coins and CBDC, and now we have this another type of digital asset. We have NFT, but now a key building block I will introduce to you is SFT, which is advanced token type. You can think it as a supercharged, a super version of NFT. When I prepared this talk, Benazir told me that just only this topic is deserved for a whole seminar. So I think I'd better to introduce the SFT with an example. This is an example we built with Australian Central Bank, the Reserve Bank of Australia, RBA. So in the early last year, they ran a CBDC pilot. So we built this project for them, basically around the SFT, the semi-fungible token I call it SFT, the stable coin, CBDC, and smart contract. Not mention the blockchain. Okay, I will introduce you. This is this example to you. This is a use case that streamlined the invoice finance or factoring. So you must know what factoring is, but we use by using the blockchain, the smart contract, and SFT, we can greatly improve the efficiency and automate the process. Let me introduce it to you. Okay, suppose we have a supplier want to sell something to the buyer, and first of all, it issue the invoice. That invoice is a SFT. It's a token on blockchain. So because it's a token on blockchain, so the buyer can easily confirm that token on the blockchain, and everybody can authenticate that it's genuine, it's not a fake. Then with that SFT, okay, with that SFT invoice, we can do some magic here. The SFT, first of all, it's wallet-like. So that means it can receive tokens, it can receive payment, it can store asset, you can transfer money from the SFT. So the SFT is a token, but it itself a wallet, and it can also be split in multiple pieces and composed, and it can be programmable. So let's review that. When you have a SFT invoice, you can create a receivable token. We call it account receivable token. It's another SFT. This pair of SFTs have some special relationship. That we program this pair of SFTs so that when somebody pay money, make a payment to the invoice SFT, you remember that it's like a wallet, so it can receive payment. So when it receives some payment, it will forward the payment to the paired receivable tokens. So to try to understand this, when an invoice SFT receive a payment, it can forward the payment to the paired receivable tokens. So with this, we actually build another means of payment. So the supplier, when he get the confirmed invoice, he can create a receivable tokens to represent the right to claim the payment at the payment day. So he can sell these receivables to the factory companies to get the cash to get the cash today instead of waiting for maybe another 90 days for the payment term, right? So he can sell the receivables to the factory companies and get the money today. But for the factory company, they can hold these receivables, wait until the payment term ends and get the payment. And he can also, split this account receivables tokens to many pieces and maybe pool pool one piece with another maybe 100 or 1,000 pieces of account receivable tokens to form a portfolio and sell it to other investors. So they can build a streamlined payment routes upon this technology, upon this SFTs and smart contracts. Everything is controlled by smart contract behind. So at the end of the day, at the payment day, when the buyer finally make a payment to the invoice token, maybe there are tens or hundreds of different owners own pieces of that some accounts receivable tokens, but the buyers do not need to worry about this. He doesn't need to know about how many people who's how much of the account receivables. He can simply blindly pay the CBDC to the invoice token, and the smart contract behind this invoice token can automatically and correctly distribute the cash flow to the account receivable holders and to the portfolios, to the investors. So automate everything. I hope this advanced example can let you know how we use this technologies in the real world to streamline the complex process of invoice finance. Okay, the third and last group of building blocks I would like to introduce today is verifiable credential and programmable payment. Verifiable credential, I believe when you review this example, you will think that okay, you are good at dealing with the payment branch, but we have another branch that is document. You have to evaluate the credit of the buyers and the sellers, right? So how we can evaluate these documents, how we can represent this document, how we can trust this document. Okay, that's where the verifiable credential or VC cut in. So VC is actually just a digitally signed documents, but if we follow the standardized by W3C, an organization, then we can call it verifiable credential. So it's again, it's decentralized. It's easy to verify. It can help you to protect your privacy. But the one thing I would like to mention here is that it's called verifiable credential, but in practice, it can be everything. It can be digital passport. It can be license, certificate, ticket, invoice, bills, contracts, and any types of documents. So I think a better name for it is verifiable document. But anyway, it's a VC. Okay, with its VC, and with that, we can do a lot of difficult thing purely on blockchain and on Web3 world. The last but not least building blocks I would like to introduce is programmable payment. We have same program payment in previous example. We program the cash flow so that when the payer make the payment, it flows to the right person. But when somebody standardized this technology, we have something called programmable payment, and we have multiple models and standards to program money and programmable payment. But I would like to highlight this one, purpose-bound money. This is a new programmable money and programmable payment standard, devised by MAS, by Monetary Authority of Singapore. And I would recommend you to study this technology because it's very advanced. I'll give you a very quick example about how we use it in the PBM. I am building another project with the Central Bank of Singapore and Ghana. We call it Project DSFT. It's basically we program a PBM to handle to process the cross-border escrow payment, so that the payer, the buyer, first the buyer can deposit the funds into the PBM and everybody can see that. So the seller, the producer, can produce the goods with confidence and handle the transportation, deliver the goods to the buyer. The magic here is that the money once being deposited into the PBM, even the buyer cannot withdraw it. So it's locked there. So how and who can claim the locked money there? That can be programmed. That's why we call it programmable money, programmable payment. So the seller has to, produce the goods and facilitate the transportation, and the seller can present some evidence to the PBM to claim to claim the funds. For example, it can present the invoice, the bills of lading, and the certificate of delivery to the PBM. But you will ask, what type of evidence can this seller present to the PBM? You guess it. That's VC. That's verifiable credential. So basically, the seller can represent his evidence, his bills of lading, his invoice in VC, and present it to the PBM. The PBM read those verifiable credentials and verify that this verifiable credential is true, and the seller has met the requirements. Then the PBM can release the funds to the seller. All this, we don't need to bother the third party, the platform, something like that. Only when dispute arise, we need to involve notary or arbitrator. So we are still developing this case with MAS and the Bank of Ghana. I hope these examples make sense to you. Okay, so let me give a quick conclusion. Web3 is actually a new way to enhance trust and facilitate digital collaboration among peers, among different entities. We have a lot of building blocks in Web3 today, but I think I have introduced you a few most important and fundamental ones: the ID or SSI, self-sovereign identity, blockchain, DLT, tokenization, and smart contracts, and verifiable credential. Certainly, I didn't talk about all of them. At least I think you need to know about Oracle and tokenomics. They are all very powerful and important building blocks in Web3. But that might be the topic of another talk. So yeah, that's pretty much of it today. Thank you very much. Hope it's
Thank you,
helpful.
Jan. We did receive a comment during your talk, which might be of interest to you. So Yannick says a business owner can understand high-level blockchain concepts, understand the technology, but is overwhelmed and does not understand the underlying complexity and reliability of a blockchain network. This is a major blocker with blockchain, in my opinion. Would you like to comment on that?
You're right. Technically, blockchain is something that hard to grasp. But for the business leaders, I would recommend you to think it as just immutable ledger or immutable database, a reliable record of history of what really happened. So think about it. If everything of your business, of your partners' transaction histories, and every piece of invoice and the business record can be correctly can be stored in a way that first it has a clear timestamp. Second, it's temper proof. Nobody can change it. Nobody can mutate it. We have a reliable consensus of what has happened. Then you can think of how we can use that facility to reduce the friction, the transactional friction, to increase the trust between you and your business partners. I think that's a way to understand this technology. It's not something that technically so sophisticated, but it's a special arrangement so that people cannot cheat each other, cannot cheat each other. So just think about that. It's a way to force people to be honest. Yeah.
Well, thank you for this. So we do have some other questions, but we would need now to move on with our flow of the content. So we'll circle back to the questions received now at the end of the webinar. Thank you, Jan.
Thank you. Thank you so much.
So next up, I would like to introduce Benito Elisa, CEO of Wakanda 4.0, who will be sharing his expertise on how small and medium-sized enterprises and marketeers can leverage decentralized technologies to innovate, reach new markets, and enhance customer engagement in this new decentralized economy. Now, Benito comes from a long-standing record spanning over several years in the banking and financial services sector, and he is very passionate about modern technologies and its applications in business activities. Benito, we appreciate you for accepting our invitation and joining the session today. Over to you now.
Thank you, Benazia. Hello, everyone. Thank you to Mark for this invitation to talk a bit about the Web3 and how SMEs and marketers can benefit from Web3 and the different tools available. So, firstly, thank you to Meng. Very nice presentation, very insightful. And I think you have done the most difficult part. And like my background is mainly from a finance background, banking and finance background. And since 8 years, I've joined the FinTech industry. And so I'm like into the Web3 space, but particularly into the blockchain, let's say crypto, virtual asset side. I'm going to start my presentation with, let me share my screen. And let me know if in my screen. Okay. All right. So when we talk about Web3, we are talking about decentralization. And when we talk about decentralization, we are talking about eliminating the intermediary. And of course, if you have gone through the presentation of Jan, and you will see that you have blockchain and also what we call the DLT, the distributed ledger technology, which is like a foundation to build a different application for Web3. And also Web3, we are going to have the contribution of AI, artificial intelligence, that is going to help build the Web3. One important thing that we need to understand that Web3 is not something that like has already been built. It is something that it is in progress. We are building the Web3 now, and you have different elements. Um, I know Benazir have mentioned DeFi. Of course, blockchain is at the heart of Web3. And then we have different blocks like Jan has already presented. We are talking about stablecoins, CBDCs, and smart contracts. So many things can be done with these elements. So now, how we are going to use these tools to be able to apply it for business, that's another thing. I'm very happy that Jan has showcased two examples. And this is show you the potentials, the capacity of Web3, what we can produce, and how we are going to disrupt many things, many sectors. And when we talk about all these disruptions, of course, all these needs to be accompanied by the legal part, the legal aspect of it. When we talk about smart contract, I'm sorry, when we talk about smart contracts and all that, so how are the contracts compatible with local laws, depending on where you're going to do business, if you're going to do business at international level, cross-border transaction and all that. And I'm going to talk about the different opportunities. So here's my the agenda. So I'm going to talk about the introduction quickly. I'm not going to cover everything. I'm limited time, the advantages for small and medium size enterprise, Web3 potential to revolutionize marketing strategies for SMEs. I'm going to give you like some case studies, the challenges and risks associated with Web3, adoption for SMEs and marketers, and then the future of Web3 will be covered by Jevon, which will be the next speaker. So, like covered by Jan, we are talking about decentralized application. We are talking about blockchain-based marketing. So I'm going to give you some example where we use NFTs. I don't know if like you're familiar with NFTs, non-fungible tokens, and you have different types of tokens. And the art industry mainly has benefits from the NFTs, blockchain-based tokens, which was used to prove the authenticity and ownership of fine arts, right? And then there are many use cases where NFTs are being used, for example, for loyalty program, for hotels, for different sectors. And you will see that smart contracts is a very important tool. And one thing we need to note is that not all blockchain offers the smart contract feature, right? You can do some research on it, like you have Ethereum, like Solana, and many others. You can check, and then you can decide on which blockchain you want to build your business case, right? And also, I think Jan has mentioned about DID. The good thing with Web3 is users, we are going to have like control on our data and with whom we are going to share it. And it's not like traditionally it has been where we are going to open accounts, for example, with Meta or Facebook, and they're going to have a huge database and then they can monetize this. So things are going to change where when we say we, I'm talking about users. I'm sorry for Mark Zuckerberg. Blockchain is here and smart contracts, so we will be able to manage our own data. And we will decide with whom we want to share our data. And the good thing is when we have control on our data, so we won't have like big fat companies like making huge money. So we can try to see how we're going to monetize our data too. So now Jan has also mentioned about tokenization. Traditionally, and when we talk for SMEs, when we talk about raising capital, we have only either we go for an IPO, equity, or we look for debts with banks. And now with blockchain and virtual asset tokens and all that, we have another option. We can raise capital through tokenization. And what I'm talking about is you can create tokens and then you can have different level of how you're going to raise capital. You can approach private investors to invest into your project. Of course, investors will check if your project is viable or not. And then, of course, I think they will have lots of questions. We check the financials and all that. And then they will agree to buy your token, inject capital into your project. And of course, one important thing that you need to know, the legal part in Mauritius, you have the Vitus Act and uh, like you have the regulated ITU. So if ever you want to raise capital, you want to create your own token, launch your own token, you can apply, you should apply for an ITO license with the Financial Services Commission, and then you can sell your token publicly, or you can reach out to private investors, like I mentioned. So this is another way how we can, when we say we, it's SME now, right? How SMEs can raise capital for their project. So, like I've said, the legal part is very important. It's not like what we call the ICO time. You were having lots of projects everywhere around the world where you will see like ICO here, new tokens, like they are just trying to get funds from investors and then they disappear. So now with regulation, it is good that we have regulation and then we can operate in a like regulated way, and we don't have people cheating on you or trying to steal your money and all that. Crowdfunding and market access. So Web3 facilitates crowdfunding opportunities, and you are not limited by like frontiers. Let's say if you have a project in Mauritius and you want to go global to raise your capital, so you through tokenization you can sell your token online to people from other countries too, and this increases the pool of investors. So incentivizing user engagement by utilizing tokens, SMEs and marketers can incentivize user engagement, fostering loyalty and participation with the ecosystem. I'm going to talk about this, about the loyalty program where you can benefit from blockchain and tokenization. So what are the advantages of the Web3 for SMEs? So decentralized social media marketing, like I've mentioned, there's something which is called social file. You can note it down and then you can Google it. Social file is like we use blockchain. Social file is social and finance, and then we make use of blockchain, where each user is going to have an account, but you're going to be in control of your data, right? One good example of a decentralized social network is social file network. You can check Mastodon. You can check all the different features that they're offering and all that. So Mastodon, Mastodon. You can do personalized user experiences. So by leveraging Web3 technology, SMEs can deliver personalized experiences to their customers, enhancing satisfaction and loyalty. You can create your own community, right? You don't need to rely on reaching out to a very well-known social media where you need to pay and then you're going to get visibility and all that. So if now you have the opportunity to reach out to your community directly, so it will be in terms of cost less costly and less expensive. So and then you can personalize your marketing directly to those clients. Efficient supply chain management. So when we're going to use blockchain, so it is blockchain is transparent. Like one of the characteristics of blockchain, it is transparency. It is whatever that you're going to do on the blockchain, it is going to stay there. No one will be able to come and amend or alter data on the blockchain. So how this can be efficient for SMEs? I'm going to give a very, very good example. Is example for trade finance. I think Jan has started an example on this, how we can streamline these processes, because there are lots of inefficiencies actually that can be eliminated with the use of smart contract, right? But of course, for SMEs, like someone I think Yannick has mentioned, that it is difficult for users, businesses, SMEs, business owners to understand the technicalities of blockchain, which is true. But that's why we need people like Jan and Jevon, like on the technical side, to help to build these different processes using blockchain and smart contracts. So when we talk about automation, there are many things that can be eliminated. Let's say if someone like is trying to import a product from, let's say, China, for example, and we are based in Mauritius. So instead of going through the traditional way, you go through bill of lading or letter of credit and all that. So all these can be streamlined through a smart contract. And of course, you need to be connected. This smart contract needs to be connected to different other system where they're going to communicate information, and then the smart contract will execute like the next predefined process that has been agreed on the contract. So there are many things that can be done. Even the financial part, like using other virtual asset, virtual currency, or stable coins, or now we have the introduction of CBDCs. So all these can be integrated into the system and then can automate many processes. So access to decentralized finance, right? I've already explained. Now you have what we call DeFi platform, and through DeFi platform you can have different products and features that you can use on DeFi. And of course, what I'm saying is, I'm just explaining what we can do with these different platforms, but we need to deal with regulated platform, right? Don't deal like with all DeFi platforms which are unregulated and all that. We are going the regulated way. So as business owners, SMEs, they need to know that when they are going to onboard a platform, you need to check if this particular platform is licensed or not. So alternative funding. So on DeFi platform, you can do staking, you can do yield farming, you can have lending and borrowing into cryptocurrencies, into virtual assets. You have smart contract based loan that is being shared here. SMEs can leverage smart contracts in Web3 to access decentralized loan, offering more flexible and transparent borrowing options. So reduce financial intermediaries when we are eliminating intermediaries. So we are reducing the cost of SMEs. So Web3's potential to revolutionize marketing strategies. So we have talked about the decentralized ID management, data management. And Web3 enables SMEs to securely manage customer identities without relying on centralized databases, enhancing data privacy and security. So now it depends like which platform, what we are going to create with this, and this will give the power to the users to control their data and then to share whenever it is requested and required. So immutable data storage, it is one of the characteristics of blockchain. So whatever that you're going to do on the blockchain, no one will be able to come and alter this information. So you're protected. Enhance user consent mechanism. So Web3 facilitates transparent and user control consent mechanism, empowering SMEs to build trust and comply with privacy regulation. Direct peer-to-peer engagement. So for marketers now, if you have control over your community, you're building a community, and then you can communicate directly to them, and this can definitely help you to like have like the trust, loyalty from your client instead of going through third party and trying to push visibility like visuals to them, and this can help with marketing. Tokenized incentive mechanism. So you can create some incentive mechanism using tokenization. You can create your own token. You can create like your own loyalty program. You can put some incentive for your community, your users to like remain like faithful with your brand, for example. And there are many things that you can do. But the first thing that you need to understand, my recommendation to you is to understand the tools that can be used like for this. And then, of course, you need to have this consultancy with the blockchain development experts, smart contracts expert, and then you will be able to come with something which is new, which is innovative, which is going to differentiate you from traditional players. So decentralized referral programs and all that. Challenges now. When we talk about the challenges and risks associated with Web3 adoption, of course, everything is like fine. Yes, we are bringing new concepts and all that, but there are challenges and risks associated with Web3. So data privacy and protection, like I mentioned, we have all sorts of data privacy regulation rules like everywhere. We are talking about GDPR in Europe and all that. So we need to see how we are going to comply with all these laws. And secondly, when we talk about blockchain security, we need to ensure that we work with secured like blockchain. And in terms of, because we are talking about IT, we are talking about technology platform, we need to be sure that these software, these technologies, they are secure to be able to share our data, and then that our data are being protected and there won't be any breach and all that. The next one is more contract vulnerabilities and understanding and mitigating the risk associated with smart contract vulnerabilities to ensure transactional security and reliability. One important aspect when we talk about smart contract on blockchain, for example, in the crypto industry, FinTech part, when you apply for a license with, let's say, the regulator, they will ask you to submit an audit report on the smart contract that has been developed. So there's an importance like to ensure that this particular smart contract has been well coded, right? And then it needs to be vetted by a third party. And then you have this assurance that, okay, you can be dealing with this particular token. And now when we are talking about smart contract doing like so many things with predefined conditions, you're like we have seen in the example of Jan, where you're going to inject your money into a smart contract, and then it will be only exit when it has met the different conditions that has been agreed at the start. But what happens, like if um, like in between one of the party doesn't want to go forward? So we need to see, like, on the legal aspect too, what are the courts are going to say in this particular case. So there are many other things that we need to take into consideration. It is not like on an ideal situation. And the next item is decentralized identity management. The adoption of decentralized identity system brings both opportunities and challenges, such as managing user identities and access control. So these are the different security concerns. Regulatory, like I already explained, compliance complexity, smart contract legality. And on this part, there is a paper which was released by a lecturer of the UTM, Dr. Viraj Fulena. I think this paper was released during the Society 5.0 in Mauritius. So if you have a look, you can go to the Society 5.0 website. You can check this paper, and he has done a research on the compatibility of smart contract with local motion laws. Okay, this is like for motions, like those who are interested, you can check this. This is it for me. I hope this was insightful for you. And like, if there's any question, I would be happy to answer Benazir.
Thank you so much, Benito. So we do have two questions that came in, but for now, I'm going to keep them for the last part of the webinar as we move on with Jevon's next section.
All right.
Thank you so much. I'll circle back to you in a bit.
All right.
So hi, Jevon. Happy to introduce Jevon here, CTO at Arrel Technology, who will share on some of the strategies to foster sustainable growth and adoption of Web3 technologies as a follow-up. Jevon here has pioneered the development of Arrel's digital asset platform, streamlining digital asset operations for institutional clients. Now, prior to Arrel, Jevon founded a successful RegTech software company servicing many publicly listed corporations and big four accounting firms in South Africa. So Jevon, again, thank you for making the time to be here today. Over to you now.
Thank you for that introduction. I'm just going to bring up my presentation. Should be there now. So I hope you can all see that. So thank you very much for inviting me here to talk. I'm thrilled to talk about a topic I'm very passionate about. So I represent Arrel where I co-founded this 7 years ago and act as the CTO at the moment. Just touching on, or continuing on what Arrel does, we're at the forefront of institutional infrastructure for digital assets, providing a service that ties together the custody, trading, transfer, and analytics, everything really that an institution requires to run the digital asset operations, as well as providing advisory to our clients on how to engage in the space. So let's dive into the topic at hand, and I want to just really start with what we define really as the Web3 economy. So I'm going to contextualize that, and then go into just talking around what I believe is a key driver in enabling this technology, and that's interoperability. We'll then touch on tokenization. It's been touched on before, but I think we retire that into interoperability and enabling growth. It's very important. And obviously, because I'm very familiar with what we do at Arrel, I'll use one of the examples in which how we're engaging with the Web3 ecosystem to just further explore this topic. And then we'll have quite a speculative look into the future to try to whet the taste buds as to where this could go in 10, 20 years' time. So when we look at the Web3 economy, let's look at the Web3 evolution. We started with Web 1, where we've got this ability just to read from the web, read only static web pages, but really was the democratization of information. And in the early 2000s, we then had this ability to now write back to the web. So what did this introduce? Well, it introduced blogs, social media, and of course, e-commerce. Great value that came into the web into web. But a key point here is really where the value is being accrued. And Jan mentioned this in his topic as well. It's these centralized entities that are accruing this data and accruing the value, finding the ways to monetize that data. And I absolutely don't mean to demonize these entities at all. It's just a key point when we look at Web3. So what does Web3 introduce? Well, we had the ability to read, now write, and now we've also got the ability to own. So consider previously, well, and still today, where these entities are storing this data. They are the ones that are able to extract the value out of that data. Now we have the ability where these content creators can store the data themselves outside of these intermediaries, storing on this decentralized network and take ownership of that data themselves. And not only take ownership of this data, but also be able to transact with peers, again, without the intermediary. And so we have this value accrual coming within this ecosystem with the community and the players within this ecosystem, rather than these other centralized players. And that then provides different ways in which to monetize this or extract value. And when I say monetize, I don't necessarily mean in currency, but many ways to extract value out of this. And because this value is being stored in this ecosystem with the value going to the content creators, the communities, that's why we refer to it as the internet of value, where we start to bring in these concepts with interoperability, which you would have seen actually has been touched on in the other slides, but the ability for us to transact across different assets as well. So when we go on to the internet of value, we're talking about where the value is being accrued. It's being accrued in decentralized nature to content creators. And I would like to touch on an example by the Brave company. So Brave has their own browser, the Brave browser. And what does this do? Well, the Brave browser really stops the tracking of your data. So your search history is not going out to these third parties. It's not being used by advertisers without your permission. It keeps that, it stops all that tracking and allows you to enable whether you want advertisers to use that data. So it's giving you the option to monetize your own search history. And by doing that, those advertisers remunerate you in a basic attention token. So consider this now. This is a world where you have a search history and you're able to now monetize that yourself. Let's consider another platform, Audius. So Audius is a platform that enables musicians as content creators to upload their own content, engage with fans in a decentralized manner. So bypassing the intermediaries that they generally would use and interact directly on the blockchain. So why do I mention this? Well, it's because it's a different type of assets, completely different community. And now if you go back to the Brave example, you've taken your search history, you've now managed to monetize that and get this basic attention token or multiple of that. You can then take it to the Audius platform and go and buy music. And so you're enabling an economy without any intermediary here. Now that's interoperability. So let's think about the silos of today. If I wanted to trade shares with my friend Mark, what's going to happen is that I'm going to go to my broker, he's going to go to his broker, who in turn is going to go to their custodian, who goes to the transfer agent to engage with the market maker, who's likely taking some spread on either side of the trade. And of course, we're going to pay for those intermediaries along the way. And we pay for that and maintain the privilege of waiting 2 days for this to settle. Now, this is just one supply chain that I mentioned here, but obviously if you want to buy event tickets or whatever it is, the supply chains are there. I'm not going to bore you with the details, but they exist. What Web3 is doing is removing these frictions. It's also, and in many cases, enabling near instant settlement. So what we're doing here as well, besides removing all those inefficiencies is we're releasing locked capital. We're making money more productive. So let's look at tokenization. How this is going to play a key part here. So tokenization, just the digitization really of ownership. But I believe as we see these type of efficiencies I've been talking about coming into play and this interoperability between all these different assets, that tokenization is going to go through, we're going to go through a state of hyper tokenization. You're going to find more assets being tokenized, bringing into this Web3 economy. Anything that is of value or has some yield, cash flow associated to it will be tokenized to come into this ecosystem of interoperability. And I think as those type of assets increase, we're going to find new ways to add value and distribute this value. And just consider, as you bring new assets into this, the sort of lending and borrowing markets as an example that come out. You've got new asset classes that can be used as collateral. And I'm sure many in the finance world will, look, their lives going great. We've got more lending and borrowing coming out and new credit facilities coming out. But what I'm excited about is, especially within Africa, is now people who haven't had the access to capital to grow previously may now have that access. And it's a great way for us to enable the growth of Web3 within Africa and allow Africans themselves to solve their own problems. So as this tokenization starts to increase, and I believe it will snowball, I can just imagine a time of unparalleled innovation along with inclusion. So let's touch on another example. I'm going to go back to my own company because I'm obviously very familiar with the examples that we have. And I'm going to just rephrase how we look at the Web3 ecosystem. Or ecosystem or economy here. And we've spoken about, we've got blockchains, we've got wallets, we've got DeFi as well. But when we look at a practical use case, especially within institutions, we have to look at a bunch of supplementary components that work alongside this fundamental and interoperable layer. And we've got on-chain analytics providers, think of some people like Chainalysis, we've got centralized exchanges, we've got management tools, ways to manage your liquidity, oversight of portfolios. All these types of tools are required by institutions to really run an efficient operation. So I'm going to look at a really simple use case. And let's look at a payments provider, a very simple use case. They want to receive crypto. They need to check the source of funds of that crypto, so do some sort of analytics. And then they want to trade that into some other asset and transfer or withdraw that out. So what are they going to need? Well, if they want to receive cryptocurrency, maybe they go to Fireblocks. Fireblocks is a well-known custody tech provider, and they get the infrastructure there to spin up wallets, receive cryptocurrency. And they go, okay, great. Well, now what we need to do is we need to be able to do analytics on this. So they get a Chainalysis account. Now they can throw transactions to Chainalysis and get some feedback there. Then they get a Coinbase account to be able to receive the digital assets, maybe transfer it into fiat and withdraw that out. Now, these are three separate interfaces for them. So what we've done is we've tried to create this interoperable layer of interfaces because the blockchain interoperability already exists. Now we need to allow these interfaces to work together. So we integrate in Fireblocks, we integrate in Coinbase, we integrate in Chainalysis. Or of course, we're not the only provider that is doing this, but this, I believe, is a barrier for institutions. And creating these easier entry points for institutions and individuals is a key factor in enabling growth. Other key factors just outside of interoperability, obviously, just for time today, I've tried to stick to just one key factor, but we'll just touch on ones that are obviously thrown around regularly. Regulatory uncertainty is a big one. Many big institutions that are just sitting on the sidelines waiting for regulatory certainty within their own jurisdictions. I was listening to a talk with Kathy Wood and Brian Armstrong the other day, and Brian Armstrong, he's the CEO of Coinbase, spoke to a bunch of institutions that he's onboarded but can't actually touch digital assets just yet, waiting to be involved, and he's crying for regulatory certainty to allow those institutions to access this. Education and awareness. This is great to bring in new talent, bring in new users, and again, a key thing for Africa here is to enable our innovators here to come in and solve Africa's problem. And kudos here to Mauritius Africa FinTech Hub, who's a key driver in that. From a technology standpoint, obviously we've got a lot of catching up to do with the old ties of Visa and MasterCard. Visa does 65,000 transactions per second. Ethereum, look, I'm not doing it justice here by saying it's 15 per second. They come a long way within their ecosystem of layer 2s. There are other blockchains as well trying to solve scalability issues, but we're getting there. And in my opinion, I wouldn't bet against innovation here. The catch-up will be there. And lastly, to close us out, I just want to talk about, maybe 10, 20 years out. I don't want to go in and talk about where we're going to be in 2 to 3 years' time and try to project statistics from where we are now. But what I want to focus on is where could this Web3 economy take us? So I want to bring across an example scenario. It may not be one you want to think about, but I need the point to be clear. You're in a self-driving car. You're going along a little road, a ball rolls out into the road, and of course, a little child running after that. The self-driving car needs to make a decision. If it keeps on its trajectory, unfortunately, we know the outcome. The other option it has is to swerve left. There's an elderly couple there. Now, the decision by the self-driving car, the end result is not the point here. But who enables that car or enables that code to make that decision? Who coded in those parameters? Is it the coder? Is it the manufacturer? I expect that we're going to go along the lines of, in time, regulatory bodies that are trying to put together the parameters for how these things should operate. But at the end of the day, who is really affected? I see a time where potentially blockchain can be the governance layer here. If those parameters could be put into smart contracts so that we could all vote in it and the actual stakeholders, the people who are affected, are able to partake in the governance there. That's where I'd like to see this go. And not only are we partaking in governance, but what if we could also put in the parts of the code that are executing that, and we could have clear auditability of that code. So we can audit and we can govern from one place. And that is another way in which this interoperability is enabling us. So I'll leave it as that. A lot higher level than the presentations before me. I love the detail that come out of those. So I'd just like to, again, thank you for having me here. If anyone, by the way, is in Brussels next week, there's the Ethereum Community Conference. I'll be there. Feel free to reach out. We'd love to meet up with anyone anyway. Thank you.
Thank you, Jevon, for this insightful presentation. I would like to ask Jan and Benito as well to come back on screen as we go over some of the questions that was received earlier and we could not get to those. So for everybody's reference, we had a question during your presentation, Jan, from Nandi on the limits to blockchain. So what are the limits to blockchain, or does it just keep growing since it's programmable?
Yeah, I answered this question with my text. As a type of database, technically is a slow and expensive database. So if you only use it, you can only justify the use of it in scenarios that you absolutely need that. And to program money is absolutely one of such scenarios, and it's a super important scenarios. DeFi is clearly another scenarios that you would like to pay that cost to obtain the transparency, the trust of the financial system. But I would like to say, in the early days of in the early days of blockchain, people try to use it everywhere in any I mean scenarios, and it failed. Because it's not just it's just not a general technology, general data storage, data management technology as the database is. So that's the limitation of blockchain, in my opinion. Yeah.
Thank you for that. To Benito, we had a question on what are the securities a user has since he or she can use their digital assets due to weaknesses in smart contracts or phishing attacks. If you would like to share a few words on this.
Well, yeah, to that, I'm going to share my answer. That's why regulation is really, really important in this sector. So whichever token or coins that are going to be listed publicly for investors to buy, um, all the regulators now they are asking for a third party audit on this particular smart contract token. When a token is a smart contract, right? So we need to ensure that this token, this smart contract has been correctly coded. There's no weaknesses, there's no bugs, there's no loophole where it can be subject to cyber attacks and all that. But the moment you have got this case, so you can lose your investment, right? That's why regulation is important. And I think like this is my answer how I can help to reply and give some comfort like how they can secure their investment into this space.
Thank you for this. I don't know if Jan or Jevon, you want to add on any comment on this from your side? Nope. Okay.
No, I think
the next one we
got that.
have here is on for a growing business with limited resources, what would be the expected ROI of adopting blockchain, which I think is a very good one. So, Benito, if you can start, and Jevon, Jan, if you want to share your comments as well, please feel free.
Like, I think this all, we need to look into the business case. It's not just only like applying using blockchain, right? Yeah, it should make sense for this business to use blockchain to create a process for this. The moment it is going to bring more revenues, reduce the costs, automate the process, and there's a cost benefit analysis that needs to be done. It's not just about like using blockchain and all that. I think it is important for business owners to have the input of blockchain expert. Like if this particular case is going to help the business, right? Maybe Jan and Jevon need to add something on this.
Yeah, this is a very interesting question. Blockchain is one of the very few technology that doesn't emphasize on improve individuals' efficiency. Instead it's try to improve the network efficiency. That means for individual, for a single entity, he might struggle to calculate the benefits he get. But for a network, we reduce the frictions, we improve the trust, and the overall efficiency grow very much. So let me give you a very interesting point. I just heard in a conference I attended. One in a conversation between two business leaders here in Zurich. One asked that now to do cross payment, I can get the payment fee. I mean the transaction fee as low as 0.1%. Okay, and maybe less. So why bother? I need to consider an alternative technology like blockchain. Okay, the other business leader answered him that okay, even if you need to pay higher, I thought maybe it's lower, but even if you need to pay higher transaction fee on blockchain, you will enjoy the atomic settlement of blockchain. That means you get the payment done in minutes instead of days or weeks, and that performance, that efficiency release your release your the funds locked on your book, and help you to obtain faster business cycle. And you cannot see this on the balance sheet. You cannot see this on your accounting report. But as a business leader, once you experience that, you will not go back to the traditional way of payment. That's, I think, a very good example to answer this question. Yeah.
I'll just further that slightly as well, because we deal with a lot of different payment providers in the remittance industry. And yeah, in some cases, it creates cost efficiency to them, in some cases not. But for the most case, we do actually see a cost efficiency there. But it's that speed of payment, that settlement, that is the greatest benefactor there. I mean, that's just increasing the speed of money, putting their money to work faster. We've had remittance providers coming out of Indonesia going to the UK, and they're settling within an hour back into the fiat ecosystem, rather than going through a Swift rail, which anyone who's used Swift can, I'll leave it as that.
You
Thank you for that.
optimize. I'm sorry. You optimize your working capital, and that's something that you cannot get in the current payment system. Yeah.
In line with the new question that just came in, so this is to Jevon. Since you've covered that aspect in your presentation, so what are some fields of study you would advise for youngsters to look into if they want to get involved with the space? And does your company offer internships or courses for students who are passionate about blockchain?
Sorry, I missed the first part about that question, please.
Sorry, so what are some fields of study you would recommend for youngsters, students at, let's say, graduate level, if they want to get involved within the Web3 space with regards to, let's say, skills that we're looking for at the moment? And are you offering any internships or courses for that matter from your company?
Okay, yeah, I mean, great question. We've engaged with a lot of students before. We have one of our dev houses sitting in Durban, South Africa, and we've done a lot of work with the UK Zidania, University of KwaZulu-Natal. In terms of fields, I mean, computer science, if you're in that field, I'm of the opinion that if you can learn to code in C, you can learn to code in any other language. If you understand the basics of coding, it's an easy transition out from there. And with the amounts of tools that we have online nowadays, tutorials, it's really easy to get involved. I remember attending a 2018 conference in Toronto for Ethereum, and the tooling that we had back then to develop on Ethereum was everything looked like a computer out of 1992. 6 months later, the tooling was incredible. These amazing graphical UIs. So if you wanted to get started, if you already have some sort of computer science background, getting involved in the Ethereum community, I would suggest that. They have the biggest community with probably the most extensive tool set out there for you to be involved. It's a great place to start learning. And then in terms of our company, in terms of internships, unfortunately not right now. It is something that we have had previously. It's just we just don't have space right now. That will open up in time. So I mean, someone's always able to ping me on LinkedIn if they would like, send me their CV, tell me why they're excited to be involved with blockchain, and we can always look at it in the future.
Absolutely. I would actually invite everybody in the audience to go follow our speakers and stay in tune with what's happening with them in the future. So to start closing off this webinar for today and hear a bit of your last few words, I'll go to Benito here. If there were, let's say, top 3 references or case studies or best practices that you would invite the audience to look into when it comes to adopting Web3 tools or platforms for SMEs or within marketing, which I know you mentioned Mastodon earlier. Are there some others that you would like to refer to?
Yes. Okay. The best recommendation that I can do to anyone like who is willing to understand the Web3 is go and do some readings. There are lots of stuff available on the net, YouTube and all that. Try to understand the basics of Web3, the technologies, um, understand blockchain, of course. Like you don't need to know all the technicalities, right? But at least to know what are the potentials, what can be done with that, how you can automate your process. And then you can start thinking about how you can apply these technologies. For example, let's say NFTs. You want to create an innovative loyalty program using NFTs and all that. So you must know about all these smart contracts and all that. And then you can try to think how you can bring your business to another level, how you can automate the processes, how you can reduce your costs, right? And then how you can, of course, reach out to um, new clients globally, cross border, and then you can bring your business to another level. Thank you.
Thank you, Benito. And so I have a last and fun one for you, Jan. So one of the blockers from businesses that is often reported is that either regulations or policies are not fully yet aligned, and it's a bit of a barrier for them to start adopting or testing models out. So what would you say from what you've observed of changes that would need to happen at policy level for businesses to start testing out Web3 models, if any?
Yeah, I think currently the major hurdle for mass adoption of Web3 is actually we don't have for a normal user, they just don't have a wallet. If they have a wallet, they will have a DID, and if they have a DID, they will enjoy at least some lightweight application, Web3 application. They can experience the Web3, and they can appreciate its advantage, and as well as learn to avoid its pitfalls. So I believe a major in some countries, some government, they are discussing how to promote this new technology as as a new way to promote their economy, a digital economy. So I would recommend people or government to first try to convince people install a wallet, a digital wallet. That's number one. Number two is regulation. Maybe to some people's surprise, I'm an advocate of regulation to the Web3 space. Many people against in my industry are against the regulation. They believe that the point of crypto is that it cannot be regulated. I don't agree, actually. I think if one pain lesson we learned from the last decade of the up and down of this Web3 industry is that even this industry, this technology is about trust. It could not create trust by itself, only by itself. It still need I should say conducive environment, conducive ecosystem to help this technology to build trust among people. So I would examine which country, which government will be the world's first world leader to establish I should say regulatory a conducive regulatory system to contain and to facilitate, to foster the growth of Web3 economy. And the country who did this, who does this, will be one of the leader, I believe, will be the leader of digital economy in the future. Yeah.
Thank you for this. That is a very strong ending note. I don't know if Jevon or Benito, you want to add anything more onto that? If not, I think we will call it now for the end. Thank you again, gentlemen, for making the time and being with us today. Thank you, everyone in the audience, for joining in. We will be uploading this recording to our YouTube channel. I welcome you all to follow us from our website or our social media and stay tuned for our future events.